Hello investors and future investors, welcome to the channel. For today's video, I'm going to be showing you the number one option strategy for the month of July. I will show you this option strategy in which you will be able to make consistent income and not have to worry about much. I will give you a detailed explanation of how you could go ahead and make $500 every single month and grow your small account portfolio. Now, if you're new to options trading, or you're looking to use options trading in order to make some additional income to supplement your regular 9 to 5, then you so happen to stumble onto the right video. Welcome to Investment Gains. Let's jump right into it. Welcome back, investors and future investors. My name is Tim, and on this channel, I show you how I use my portfolio in order to make consistent income. For today's video, we're really going to be getting down and dirty with options. I will be showing you a step-by-step process where you could go ahead and make consistent income on a monthly basis without having to worry much. I will be starting off this video by showing you a bit of the technicals. I will show you how to get into this option strategy, and most importantly, I'm going to show you how to get out of it in case it goes the wrong way, which there's a 90% chance it would not. Now, you guys know how we do it. We're going to go straight away and get down and dealing with options. Now, let's go ahead and start by going to the Robinhood Advanced feature right here in order for us to open up the chart. Now we have the chart open. We're going to go ahead and we're going to select the 1 year outlook, and that's going to be depicted by the 1Y right here. Now, what I want to bring to your attention immediately is going to be the two main indicators I use before making a decision of what option strategy I want to perform. The number one indicator is going to be this blue line here, which represents the MA200 or the 200-day moving average. So with the number one indicator, the 200-day moving average, you could see that this stock for the last 6 months or 200 days was trading at around $488. However, the current price of the stock is about $308. So it's down about $180 for the year. Now, this shows us there's an opportunity to get into the stock. The reason why there's an opportunity to get into the stock is because I've already gone ahead and done my own due diligence, and I've decided that this stock, which is UNH or United Health, is an actual good company. It's a good company and it is one of the S&P 500 companies. Now, the next indicator I'm going to go ahead and use is my favorite, which is the RSI or the Relative Strength Index. Now, the Relative Strength Index is a momentum indicator. According to the RSI right now is trading around a 38, around a 40 RSI. Again, that's a good bullish sign. Anything around the 50 going towards the 30 gives me an indication that I should actually be considering getting into that stock. Now, what I'm going to go ahead and do is draw a couple of trend lines. The first one is going to be right here. Now, according to this trend line, that's right around the $300 price. It shows that this stock has been trading here for a very long time. To be exact, it's been trading here from May 14th. So in a couple of days, this 300 price would have been here for the last 2 months. So that there shows you that this stock has a very strong support at the $300 mark. Now, I'm going to go ahead and show you an additional trend line. I'm going to go right above and I'm going to show you the resistance right here. The resistance right here is around the $320 range, 320, 321. What the resistance tells us is that the share price has difficulty getting past this resistance. It does go above it, but it soon comes back to it. Now, with the support of 300 and the resistance of around 320, 321, I'm going to use that in order for us to make a very informed decision. Now, before I go ahead and show you what option strategy I'm going to use, I'm going to go ahead and do one more line. And that line is going to be our next break upwards. The next break upwards is around the 375 mark right there. So I have some targets in mind, which is going to be the $300 mark, the 320 mark, and then now the 375 mark. Now I'm going to go ahead and show you what option strategy I will go ahead and perform with this stock. Now, before we go ahead and get into that, I always have two requirements from my subscribers as well as my viewers. Requirement number one is always going to be always make sure to do your own due diligence before entering any options trade. Quite frankly, what might work for my portfolio may not work for yours. The second requirement is going to be Always make sure to have an exit strategy before entering any options trade. That way, if the trade do decide to go against you, you know how to get out of the trade. That being said, let's go ahead down to trade UNH options down here in order for us to open up the options chain. So here's the first option strategy I'm going to do right now for United Health. That's today. So I'm going to go to buy, I'm going to go to call, and I'm going to go ahead and select my strike date. The strike date I'm going to be choosing is going to be very important. I will be going with the June 18th, 2026. Now that's going to give me around 349 days to expiration. Let's go ahead and select that. The reason why I went ahead and choose such a long expiration date is that I want to give this option enough time to work in my favor. Now that I have my buy and I have my call and I have my long expiration date, I'm going to go ahead and choose my strike price. The strike price I will be choosing is one of those prices I just showed you of the chart, and that's going to be the $300. I just demonstrated that the $300 show you a very strong support. So the strike price I will be choosing is going to be that. I'm going to go ahead. I'm going to click into this right here. This is a buy option strategy. This buy option strategy is known as a long call or a leaps option. So the first thing I would do to trade United Health right now is to pick up a long call or a leaps option. Now, this is a buy option strategy, so that means we're going to have to pay. The amount we're going to have to pay for this $300 strike price is going to be $55.90 in the options world. However, in the real world, this is going to be $5,590. And that's because each option contract does contain 100 shares. So you simply multiply your 55.90 by 100 shares, and that's going to give you $5,590. Now that we have this leaps option in our portfolio, we are secured for 1 year. We don't have to worry. The whole point of us picking up this leaps option is that we're going to sit tight with this in our options portfolio, and we're going to wait for this share price right here to go up. Now, my first exit strategy, what I'm looking for is for this share price to go anywhere between the 350 price and the 375 price. I did show you the next level up is going to be the 375 price. So I'm looking to exit anywhere around there. Now, it's probably going to take a long time to get there. No one knows why. But while I'm waiting, I do have the patience to wait. I do, however, want to make some consistent income. I did promise you guys that you're going to be making consistent income on a monthly basis. So what we're going to do, I'm going to go ahead and show you an option strategy that's going to be able to use this leaps call in your portfolio in order for you to make monthly income. So now we're going to go to sell, we're going to go to call, and we're going to choose our expiration date. Now I did say I'm going to show you how to make monthly income, so I'm going to be choosing a monthly expiration date, and the closest is going to be August 1st. That gives us 28 days to expiration. We're going to go ahead, we're going to select that. Now I'm going to go ahead and choose my strike price above the current share price. I did show you a level of resistance. That price was the $320 mark. So I'm going to start off right there. Now, with the $320 strike price, I have a decent chance of profit. You see chance of profit right here of 72%. That is not all that bad. So with a 72% chance of profit, a 320 strike price, which resembles our resistance price, I'm going to be getting paid. The amount of money I'm going to be getting paid is going to be $1,295. Now, that's not so bad. However, I would not go ahead and choose the resistance because it's resistance. It could get broken at any time. So I will go ahead and go up and look for a secondary price. Now, to look for my secondary price, what I will be doing is going for an 80% chance or higher. Now, the 340 does strike my fancy. Now, with the 340, I do get a desired chance of profitability, which is going to be 80%, and I will be getting paid a decent premium. The premium here is going to be $730. I mean, $730 on a monthly basis, that's not too bad either. Now, I am a more conservative investor, and I do have in the back of my mind that I'm going to be using my leaps option in order to secure this covered call. So I'm going to do everything in my power in order to keep that leaps option in my portfolio. That means I'm going to go ahead and choose an even higher chance of profitability. So I will definitely be going with the $350 strike price. Don't get me wrong, the $340 strike price is fine. I'm just going to go up to the 350 strike price to increase my chance of profit. And I do not mind accepting a lot less money. Now, the amount of money I will be making on a monthly basis is going to be $545. Now, $545 is not too bad either for not doing much. So, this new option strategy is going to be known as the covered call or simply a sell call. Whenever you decide to acquire a leaps option in your portfolio and then go ahead and sell consistent covered calls against that leaps, that new option strategy is going to be known as the PMCC or the poor man's covered call. So, by implementing this poor man's covered call in your portfolio, you're now able to make around $545 on a monthly basis quite easily. Now, how does this trade work out? Come expiration date of August 1st, we're looking to make sure that this share price right here, which is now 308, it does not hit our 350 or go past it. Once that happens, we keep our 545 because it so happens this is an income generating option strategy. So the income you receive is always yours to keep no matter what. So we keep our 545 income. And then now we have our leaps option that's going to be released back to us. Remember, we were using the leaps option as collateral. Now we get that back into our portfolio. We could go ahead and do another monthly covered call and we can just keep rinsing and repeating. Now, before I show you the other way this trade could go, I want to bring something to your attention to show you how this trade could net you zero, meaning you will literally not risking anything. So, by receiving $545 on a monthly basis, this may not work all the time. So, let's say you are able to do this covered call for 10 months, you will be making $5,450. Now, I'm not sure if you remembered the price you paid to get into this leaps option was $55.90. So in 10 months, you're able to make back the entire premium you spent in order to acquire this leaps option. So come expiration date, if this share price does not go anywhere, it stays at the $308 price, and you're able to sell covered calls for 10 months, you would have recovered most of your money. 99% of your money would be recovered. So you'd be losing zero. That's what makes this the number one option strategy and trade for the month of July. Now, the other way this trade could go, come August 1st, if this share price right now happens to go past your 350 price, then once again, you're now going to be able to keep your 545, but then you're going to lose your leaps option. But it's not so bad. The reason why it's not so bad is that hopefully you remembered when we acquired our leaps option, we acquired the $300 strike price. However, the share price when we acquired the $300 strike price was 308. Now the trade has gone against us, and now we're gonna lose our covered call at above the 350, but we did choose the 350. So now Robinhood is automatically gonna close out both of these option strategies, but this is gonna be your gain. The 350, you're gonna subtract 308 from that. That's gonna leave you with 42. You are trading options right here. So you're going to multiply that 42 by $100. So your gain, if this trade goes against you, is going to be $4,200. Now that is just the gross gain. In order for you to get your net gain, you're going to multiply your $4,200 right now by the delta of the leaps option that you picked up. And that delta, if I remember correctly, was around 64.64. So multiplying your $4,200 gross by your 64% delta, your net on this is going to be around 2688 or $2,700 in addition to all the $500 you made on a monthly basis. So this is what I refer to as a win-win option strategy. There's so many little tweaks in this particular trade that allows you to win. So the number one option strategy, number one options trade for the month of July is going to be the PMCC on United Healthcare. Remember, this is not financial advice. This is merely a representation of what I am doing with my own portfolio. Make sure to do your own due diligence before entering any options trade. Now, the reasons why this is the number one option strategy for July is that if you were to enter this trade with United Health, you're going to purchase a LEAPS option at the strong support of $300 that I showed you on the graph. That's going to cost you $5,590. Now that you have that in your portfolio, you're going to go ahead and sell monthly covered calls and get a premium around $500. You're going to keep doing this until you are assigned or until your leaps come to expiration. Now, here is the trick, and hopefully most of you guys stay to the end of the video. The number one hack in order for you to win this trade 100% of the time, especially on the covered call side, is always make sure to close your covered call option before expiration. What you're looking to do is get upwards of a 50% return. Once your covered call is up by 50%, I would advise you to close it off. Close it off, and then you could go ahead and do another covered call for an even higher strike price. So let me show you what that means in layman's term. The premium you receive is $545. If in 2 days your option is of 50%, so you're now locked in 200 and let's say $70. Go ahead and close the trade. That $272 is yours, guaranteed. You're now gonna go ahead and sell another covered call for another monthly expiration date, but this time you're gonna go higher than the strike price you chose previously, and you keep doing this until the trade goes against you or until it comes time to expiration. Now, one last tip I want to give you guys for your leaps option aspect of it. Most of us long-term investors, we never leave our leaps to go all the way to expiration. When it gets to like about 3 months before expiration, we go ahead and do two things. We either close it off, or if it's up, we're going to go ahead and roll it over. My personal preference is to go ahead and close it out and get another leaps on either that stock or another stock that showed me the same setup. Now, just like with your covered call option strategy, you do not need to wait for your leaps option to go to expiration. If you're up a certain percentage, whether it's be 50%, 75%, 98%, whatever percentage you're up that hits your target goal, feel free to go ahead and lock in those gains. The name of this channel is Investment Gains. Never be afraid to lock in your investment gains. That's how you keep winning in this stock market. So for those of you guys that made it to the end of the video, you guys are the real investors and future investors. If you guys would like me to go ahead and make these videos with the number one trade for the month, where you only have to focus on one trade for the entire month, then go ahead and let me know in the comments below. Now, go ahead, like the video. Subscribe to the channel. Make sure to hit that notification bell to get an alert whenever I post a video. But most importantly, if there's anyone out there you know struggling to grow a small account portfolio, then the right thing to do is to go ahead and share this video with them. We're trying to help as many as we can make income from options trading in order for them to supplement their 9 to 5, or eventually they're going to move away from their 9 to 5. Now, until the next video, keep pushing your investments.